At the interbank market, we're looking at the Treasuries market now. Average rate contracted by 28 basis points to 5.34% as the market opened on the bullish run. Aside the 87-day, 108-day and 192-day bills, all other traded bills declined. The decline occurred across the yield curve, with the short, intermediate and long end contracting respectively. The 26-day, 178-day and 290-day bills came under the most pressure. And at the bond market, average yield contracted 28 basis points to 11.61%. Declines across all traded bonds, particularly the short end of the curve, attracted the most interest, with the August 2016 gaining the most. The intermediate and long ends of the curve also experienced bullish sentiment, with notes maturing between January 2022 and July 2034 recording the highest gain of minus 21 basis points. We hope to get insight into how the Treasury bills market fared later on the program. But let's now get back to the equities market, as we're being joined in the studio by the Executive Director in charge of Capital Market Division at the Nigerian Stock Exchange, Mr. Haruna Jallow Waziri, joining us to take a look at how the market has fared and what plans authorities have for the markets in the new year. Good morning, Mr. Jallow Waziri.
Good morning. Thank you for having me.
Glad you could make it amidst the traffic, the heavy traffic along the way.
Yeah, the rains just started this morning, so it's a little bit crazy.
Okay, I'd like us to quickly go straight to the point here in terms of the market. It's a new year, and we heard the CEO of the exchange, Mr. Oscar Onyema, talking about the plans of the exchange for the market in general. Just bring us up to speed in terms of the issues raised. I'm sure you've had meetings with him on a number of occasions and with other members of the organizations. What do you have up your sleeves?
Well, it's not about what the stock exchange has up its sleeve. It's about how we react to what is currently going on. If you look at our market today, it's been down something like 22% year to date. That is something fearful. And, you know, in a bear market, typically there is more reaction than there is sense in it in terms of how people trade generally. And so we're seeing that particular effect of a bear market. More importantly is that you know, the stock market is actually a barometer of the economy of any nation. And if it was doing something different from what is happening right now, we would be fearful as a self-regulatory organization. But the truth of the matter is that people are benchmarking us against what our earnings can be from a portfolio management perspective. So, you know, crude is down, what, circa $30 per barrel trading from $100 last year. And then you're looking at, you know, the sitting around by fund managers offshore thinking about we're not likely to come into your market because we are fearful that there might be a devaluation or that we think that there should be a devaluation. So you're seeing money that ordinarily would have come sitting outside speculating certain things. Of course, if you have investments, again, thinking that there's going to be a devaluation or you assume there will be a devaluation, tendency is that you're likely to discount your portfolio position and take it out and wait and then come back at a certain point when you think that the price is right for that particular currency. So these two things are typically what was driving initially the velocity of, you know, downward spiral you're seeing in the market. But, you know, having said that, there's also one key fundamental that you're seeing the velocity go, which is, like I mentioned earlier, the fear. You know, when it's a down market, people are really scared and tend to follow the herd mentality. But, you know, like Warren Buffett has always said, you know, when people are afraid is when you should actually get greedy. You are only interested in stocks when people are not, and this is probably what people should begin to think about. The fundamentals are great if you look at what our market is doing. I know earnings are, like you said, going to be out in January. That should be the barometer for us to see how the stock market should turn around. But, I mean, my money is on when you have a bear market, this is when you should probably take advantage of the situation.
Now, people seem to be low in confidence from all I get from you. The investors are sitting on the fence and watching to see when they should make the right move to come into the market. But how do you think all of this can help build the market in terms of the fact that whether the market is low or high, we all want to go there to still make money? We've heard the NSE CEOs talking about the markets could also help fund government projects in terms of people coming to raise bonds. So how can all of this play out in the year?
So I'm glad you mentioned that. One of the key things we have done in the stock exchange is put the infrastructure in place for us to be able to do a lot of things, including build capacity for diverse investors to be in our market, such that when we have what we have currently, which is a government funding, its deficit by borrowing, especially locally. So that infrastructure is there in terms of the scope of what I call investors. So yes, we are ready to fund to provide the platform for government to fund its deficit. But the key thing is that we don't work in isolation of the economy. So policies and policymakers would have to reflect what is currently going on in terms of what the stock market should be, and there should be certain categorical statements around the importance of the stock market, and that there is a direction towards when government is going to raise money, that the stock market is going to be one of the platforms in which they would do it. So yes, what we'd like to see is some kind of mention around what the intent of the government is regarding raising those particular monies to fund the budget. So yes, again, it's a cohesion of things to be done to be able to give confidence to the market, so that that fear is actually disseminated. But I believe that, again, when earnings begin to show up in January, it should calm down the nerves of people, understanding that certain companies in the stock exchange are actually doing very well despite the harsh economic conditions.
And now, even now that we're expecting the budgets to be passed, that could impact on the markets then?
The assumption is yes, that once it's clear around what the government is going to do and how they're going to do it, especially how it affects production and the general economy as a whole, we'll likely see people beginning to wear the sensible cap and start thinking.
Okay, I know that the markets globally are interwoven, Nigeria also included. So when we look at the developments in the crude oil market, for instance, the forex markets in Nigeria, which has been very volatile, and would you say all of these have had some kind of impacts on Nigeria's stock market?
Absolutely. So we have fund managers who have global oversight around where they invest. The news coming out of China yesterday was that China has grown at 6.78%. That is probably the lowest it has done over 25 years. That's fearful. China has been the monster growing, second largest economy in the world, and has been growing in double digits. All of a sudden is growing under 7%. So the stock market itself reacted, as you can see in China, and some of the monies that are spread globally has to be taken out to be rebalanced. And you can see the turmoil around world markets. And Nigeria is not alienated from the world market from a perspective of portfolio managers. So yes, that also has significantly affected what's happening in the stock exchange.
Okay, just before I let you go, let's talk about the new listings. I know a number of companies are on queue to come into the market. Tell us about that.
Yes, so you're seeing the effect of the reorganization we've done and the effort we've made towards a business development perspective. And that is that our pipeline is very rich enough for us to start seeing some of the effect of that. So we've had 2 or 3 applications that have come in between December and January. We're likely to see another 4 or 5 by the end of second quarter. So there is a strong sense that we might likely see some listings coming in. Now, most of these listings are likely to be by introduction. So it's not going to be a public offer because when you have a down market, people don't tend to want to sell.
To raise
exactly.
Any money.
So that, and then maybe subsequently when the market recovers, you see them doing rights issues and all of that. So yes, we are hopeful in terms of primary market activities.
Okay, we'll keep our eyes on you to see what steps you're taking to revamp our stock market. Thank you so much, Mr. Haruna Jallow Waziri, the Executive Director, Capital Market Division at the Nigerian Stock Exchange. We're going to break, and when we come back, we will take you through the world of the energy markets and also talk about the commodities markets. We'll be right back.